Namaste and good morning. Welcome to the solahane.com Daily Brief, your daily dose of business news that matters. I'm your host, and today is Monday, April 7th, 2026. We've got a packed show, from factory floors slowing down to highways being built faster than ever. Let's get into it. First up, your rapid-fire headlines. 1. India's manufacturing PMI has dropped to a 4-year low of 53.9 as the West Asia conflict squeezes input costs across factories. 2. Oil prices jumped over 3% today. Brent crude is now at $111 a barrel after President Trump set a deadline for Iran to reopen the Strait of Hormuz. 3. Despite the oil jitters, the Sensex rallied 509 points to close at 74,616. That's 4 winning sessions in a row. 4. The government has scrapped customs duty on 40 petrochemical products until June to shield manufacturers from soaring raw material costs. 5. CRISIL says bank credit growth will ease to 13% this year, but MSME lending remains the fastest growing segment. 6. India's IT sector is in turmoil. 55,000 jobs have been cut so far in 2026, with Oracle alone laying off 12,000 in India. 7. NHAI crushed its highway construction target, building 5,313 kilometers in FY26, 15% above target. 8. New GST rules kicked in from April 1st, including mandatory E-Invoicing for businesses, with turnover above 5 crore. Now, let's dig deeper into 2 stories that really matter for your business. Deep dive number 1, the manufacturing slowdown. The HSBC India manufacturing PMI fell from 56.9 in February to 53.9 in March. That's the weakest reading in nearly 4 years. Now 53.9 is still above 50, so factories are still expanding, but barely. Here's what's happening on the ground. Input costs have surged to a 43-month high. If you're in manufacturing, you already know this. PET resin prices are up 50%. Pharmaceutical raw materials have jumped 200 to 300% in just 2 weeks, and packaging costs are through the roof. The culprit? The Strait of Hormuz disruption. India imports 88% of its crude oil from the region, and when oil prices spike, everything from plastics to transport costs follows. The silver lining? Export orders actually hit their strongest level since September 2025, and firms are still hiring at the fastest pace in 7 months. So demand is there, it's the cost side that's killing margins. What should you do? If you're an MSME manufacturer, this is the time to lock in raw material contracts at current prices before they climb further. Also, check if you qualify for the government's new petrochemical duty exemption. That could save you real money. Deep dive number 2, the IT jobs crisis. This is a big one. Over 55,000 tech jobs have been cut across India in early 2026. TCS alone let go of nearly 20,000 people in its biggest ever layoff. Oracle is cutting 12,000 positions in India. That's 10% of its Indian workforce. And Wipro has slashed fresher hiring guidance to under 8,000. The reason? AI. Companies are finding that roles like data analysis, entry-level programming, and routine testing can now be handled by AI tools at a fraction of the cost. Fresher hiring in IT has fallen 80% from its peak. But here's the flip side. About 1.2 to 1.4 lakh new jobs are expected in global capability centers this year, mostly in AI, data science, and cloud. So, jobs are shifting, not just disappearing. If you run a business that depends on IT services, your vendor might be understaffed right now. Have a conversation about service continuity. And if you're hiring tech talent, this is actually a buyer's market. Experienced professionals are available at more reasonable salaries than we've seen in years. Now, what does all this mean if you're running a business in India today? First, check the petrochemical duty exemption list. The government has waived customs duty on 40 products, including polypropylene, PVC, and methanol until June 30th. If you import any of these as raw materials, you could save significantly. The full list is in the Gazette notification from April 1st. Second, the RBI announces its monetary policy decision tomorrow, April 8th. Most economists expect the repo rate to stay at 5.25%. But watch the inflation forecast closely. If the RBI signals higher inflation ahead, Your borrowing costs could rise later this year. Third, if you're in infrastructure or construction, the momentum is strong. NHAI built over 5,300 kilometers of highways last year, and the budget for 2026-27 has been hiked 8.8% to a record 12.2 lakh crore. That's a lot of contracts flowing through the ecosystem. Fourth, new GST compliance is here. If your turnover crossed 5 crore last year, E-Invoicing is now mandatory. Also, intermediary services to overseas clients are now classified as exports. Great news if you're in IT services or consulting, as you can claim input tax credits. That's your 16 AIN daily brief for today, Monday, April 7th, 2026. If you're thinking about buying or selling a business, head over to solaane.com. That's 16ane.com, where we make business deals sola ane paka. See you tomorrow.